nasty final sell-off in silver last year, nearly a year ago, in the Corona crash, down to unbelievable low numbers. I think, what was the low, 1160 or something? And since then, well, first silver posted a really nice and strong leg up nearly to the $30 level. And now since last August, we basically see a sideways consolidation between, roughly speaking, $21, $22. And on the upper side, the resistance zone is round about that $30 level. And I assume that it will probably take a few more times for silver to run against that $30 level resistance zone. But once it breaks through that, then you probably will see quite a fast move towards the all-time high at $50. And silver is one of the few commodities that trades way below its 1980 high. It has a strong fundamental case in terms of battery metal, in terms of the shutdowns in many mines, especially in Mexico, is still kind of weighing on the supply side. And at the same time, with the silver squeeze in everybody's mouth nowadays, you have lots of people rushing to buy physical silver. So I think silver is in a really good and interesting spot here. Actually, right now at the $25, $26 level, I think it's still pretty cheap in the bigger picture. And as you said, I mean, I think that once we clear that $30 level, it will quickly run to the $50 level because there's not a lot of resistance anymore in between. And it's been the last time $50 we've seen is in May 2011, so this is 10 years ago. And the first time we've seen it is in January 1980, so this is more than 40 years ago. And I think that is a magnet now, this $50 level. And once it breaks above the $30, then we will end this consolidation kind of phase where it is in right now. And I assume a quick, fast move higher, yes. I guess it could take probably maybe 2 to 6 months once it breaks out. Obviously, or unfortunately, most of the time, we as the gold bugs are a little bit too impatient and expect the prices to shoot higher immediately, and often it just takes more time. I think silver still has to do some more time to run against this $30 level until it will finally break through. But 2 months at least once it does this breakout. Maybe it takes 3 to 4, but not longer than 5 to 6. I think that's already the maximum, the longer side. It's trading in that kind of sideways range. So we had 2 lows around the $21.50, $22 range, but that was already last year. So silver did not confirm that new low in the gold price last week. It actually held up much better. But if in case everything would go wrong, it would be probably again those $21, $22 levels where the market then should find support. I don't see a lot of downside for silver anymore now. Well, I mean, gold came down quite a lot from its new all-time high in last August. And it came down from $2,075 to last week's low at $1,676, so nearly $400 in 7 months. In the bigger picture, this is still just a minor pullback, but it certainly was painful for many participants, and especially it tested the nerves, and it basically shook off all the weak hands and all the impatient players. I think the next important level for gold that it needs to regain is the November low at 1765. So that's not so far away. That's basically $30, $35 from where we are. And then obviously, gold needs to regain its 200-day moving average, which is currently still a bit further away around the 1858, 1860 level. So this 1850, 1860 was support in September, October, and half of November. And that will certainly be the first serious resistance for gold on the way back up. So that basically is roundabout where the 200-day moving average is sitting right now. And again, that will also probably take some time to regain that moving average. And then the next level on the way higher would be the $1950, $1960 kind of range. That's where gold 2 times was basically badly hit, or where it basically turned around in early January and also on the 9th of November, when the news about the vaccine came out. We had this massive sell-off, $150 sell-off in one day. So this is then the next resistance level, and then we'll probably talk about a psychological number of $2,000. So actually, as you can see, there's quite a lot of work that gold has to do before we can even talk about any breakout. So I think we need to expect gold to probably at least another half a year trade below this all-time high before we can see a real breakout. I expect a rather quick recovery towards this 200-day moving average and maybe even the $1950 range, and then a back and forth kind of congestion, compression kind of range before then at some point gold has enough strength to power higher. So I don't think that we're going to see gold breaking out to new all-time highs within the next few months. In the best case, maybe in the fourth quarter this year. But in the bigger picture, this doesn't really worry me. I think it's just we want to be patient, use those low prices right now, and let the market do the rest for you. I think right now they are contrarian investments because the markets, especially gold, is so oversold, especially on the weekly chart. And after this 7 months correction, I think it's a great contrarian opportunity. Unbelievable, actually. If you remember last August, everybody was talking about gold. Nobody had the idea how this ever could turn around again. And now here we are 7 months later, $400 lower, and we have really high levels of pessimism in the market. Also, just the other day, I've seen a chart that the newsletter, the gold newsletter sentiment has hit basically a 4-year low. So since 4 years, the gold newsletter writers haven't been that bearish, which statistically is a good indication that markets, that the gold price will be moving much higher over the next 2-3 months. So I think you can still make the argument that gold and silver are not really a mainstream investment yet. That will probably happen if prices are much higher at some point in the next few years.